Good morning, good afternoon to you all. Thanks so much for joining us. For some of you early on Monday or late on Monday. We're really delighted to have you for the launch of our annual report, the China Climate Transition Outlook for 2025. I'm really delighted to be joined by the entire China CREA team. So this is the first time we have everyone in one webinar, and I hope it'll be quite nice. My name is Belinda Schepe, and I'm a China analyst with CREA, and I lead our work on engagement and climate diplomacy. And I'm delighted to be joined by our co-founder and lead analyst, Larry Milliverter, and by our three China analysts, Qiqin, Chang Chengqiu, and Xini Shen, who will cover different sections of the report. This is the fourth time we've done it, and it covers progress across different sectors against benchmarks and policy updates that we have seen across the year. And I think this year there are quite a few interesting notable changes. We will present the key findings of the report first, and then there will be time for all of you to ask questions. And if you have questions during the presentations, please feel free to drop them into the QA box. We're also recording this webinar, so we will make that available afterwards. But without further ado, I'm going to hand it over to Larry. I'm going to share the slides to kick us off.
Thanks so much, Belinda, and so great to see so many of you joining. Thank you for that. So as Belinda said, this is our fourth climate transition outlook, and the idea with launching this series was to have an annual. So first of all, measure how China is doing against its own carbon neutrality target and against what we call Paris-aligned pathways. So the different pathways that Chinese researchers and international researchers have modeled for China to reduce its emissions in line with the goals of the Paris Agreement. And so what we really want to do here is to break the progress down into different sectors and different indicators. So not just say that emissions went up by 3% or came down by 2% this year, so they're on track, or they're not on track. That's not very helpful and very actionable. So we really want to break this down by sector and look and capture the key transformations that have to happen in each sector for China to align. It's mainly the energy system. That's where we're able to energy and industrial sectors. That's where we are able to track things in quite a lot of detail. In the other sectors, as we'll hear, there's just a lack of visibility. And it's also capturing all the policy developments that happened over the past year. So it's tallying up all the key policies, of which there are, of course, always a lot in China, and showing what direction they're pulling. So that's more the outlook, the forward-looking part of this. Also, another forward-looking part is that we're tracking not just the changes in energy use and emissions during the year, but also investment trends, which then, of course, influences and gives indications of emissions development into the future. It's also we also do a summary of the climate impacts that China has experienced over the year that has passed in the introduction of each report, and it's always a sobering list when you look at the whole year, because so many tragic events happen each year that you've already forgotten the ones early in the year and so on. So I think it also shows the case for action. Belinda, if you go into the next slide. So I'm just going to spoil everyone else's presentations by showing the very big picture view of where things are on and off track. So this year is expected to be another record year of clean energy additions. So the rectangles show the range of growth for each of the indicators within the literature in the different Paris-aligned pathways in the literature, and you can see that the growth in clean energy is at the very top end of the scenarios of the pathways. So in that sense, this year is another record and another year that indicator is at least superficially on track. Electrification has also accelerated, so the share of electricity in the total energy mix, and that's important because that's setting things up, setting different sectors up for deep emission reductions in the future, because we know how to make electricity zero carbon. So the more that the energy system is running on electricity, the better the preconditions for future emission reductions. However, in spite of those two very positive data points, CO2 emissions will be approximately flat this year. The remaining months of November and December, for which we don't yet have complete data, will decide whether it's a small plus or a small minus, but we can already say with certainty that emissions are not coming down at the rate that they should be, and in spite of these two positive indicators. And the reason for that is total energy use continues to grow faster than these different pathways have predicted, both Chinese and international teams' projections. And that's mainly due to the industrial sector, also buildings. But so that really presents both the modelers, the researchers, and the policymakers with a question of is China going to grow its total energy use at a lower rate in the future, or do then clean energy additions have to be even bigger to make up for the fact that energy use continues to grow faster? And so for now, what happened in the past couple of years, economic policy continued to emphasize manufacturing more and more. So economic structure is moving in a more energy-intensive direction. And the former policy system of controlling total energy consumption and energy intensity was really abolished. So under those conditions, I think it's much more likely that the plausible answer is that clean energy has to grow even faster. And so then, as a result of this total energy use growing faster, it's coal consumption where we're seeing a flattening of the curve, but we're not seeing the reductions that are needed. Oil consumption and gas consumption are well within the range of the pathways, and the slowdown in oil consumption growth is one of the positives, one of the highlights of the year. Moving on to the next slide. So when we look at this sector by sector, what's really encouraging is that almost all of the key emitting sectors are experiencing this plateau. So it's not just about the electricity sector. The electrification and other important trends are bringing down emissions in transportation, in industrial coal use for the most part, and in the production of construction materials. The shift in the structure of the economy away from construction, it has meant that emissions from the production of building materials have peaked already in 2021, and the production of building materials, cement, And steel was, of course, a massive driver of China's emissions over the past couple of decades. So that's highly significant. The one sector where we are seeing continued growth is the chemical sector, both oil-based petrochemicals, especially for the production of plastics, and coal-based chemical industry, which is being expanded aggressively. One notable thing about that is that of course, the key motivation is energy security, replacing imported oil and gas, but the majority of the expansion of the coal to chemical industry is driven by the production of liquid and gaseous fuels. And so this is where electrification can also provide the same energy security benefits. So that's a key question for the policymakers for the next year. Does it make sense to pursue this extremely emission-intensive strategy of trying to replace imported oil and gas when the clean solutions to do so are clearly available? Next slide, please. And so I'm not going to go through this because then I would truly spoil everyone else's presentations, but I will just show that I want to show the diversity of the indicators that we're tracking, and the overall picture, as you can see, is that there are more green lights this year than the previous year, but also indicators that are consistently showing red, so still clearly off track, and so steel production, investments in coal and gas-fired power capacity, and so on. So really trying to pinpoint where things are still off track. And then for my last slide, so the other key finding from the policy roundup for this year is that well, first of all, one thing that does need to be highlighted is that in spite of the recent progress in the past 2 years in stabilizing emissions, China is going to miss some of the key targets for 2025, the target for reducing carbon intensity, and the pledges to strictly control coal consumption growth and new coal-fired power. And this is because of the sharp rise in energy demand and electricity demand and coal consumption during the pandemic period and right after it. So it was really a period of the economy shifting in a much more energy-intensive direction. And so then the key question for the next 5 years is, are China's policymakers determined to still meet their 2030 commitments, given the fact that they are now significantly off track and need much more action over the next 5 years to get back on track? And there it's the commitment to reduce carbon intensity by 2030 and the commitment to gradually reduce coal consumption that are the key questions. And in recent policy documents, there have been mixed signals about this. So this is really the key question for the next 5 years. There are also some aspects of the policy environment that are creating uncertainty. So clearly, the policymakers are still leaving the door open to a rebound in emissions in the short term, in spite of the fact that emissions have been flatlining for almost the past 2 years. So they set the 2035 emission reduction target from peak levels and are emphasizing peaking emissions, peaking coal consumption, peaking oil consumption over the next 5 years, which then means that all of those things could still increase over the first years of the next 5-year period. There are currently modest targets for increasing solar and wind and new pricing rules that mean that they have to compete against existing coal under unfavorable conditions. So that's creating uncertainty for how much solar and wind gets deployed over the next few years. And as Zizin will cover, the permitting of coal and gas-fired power plants continues at a rapid rate. So then what's the risk is that we have a glut of new coal and gas-fired power at a time when solar and wind are supposed to compete against those coal and gas-fired power plants head to head. But on the other hand, it's clear that the clean energy boom has very strong economic momentum, and China clearly has the capacity to sustain falling emissions if the makers choose to do that. And obviously, then the signals from the upcoming 5-year plans, not just the central plan, but the provincial plans and the sectoral plans are essential, as is the question of whether China will commit to meeting the 2035 targets despite the setbacks during this 5-year period that is just about to end. Thank you so much.
Thanks a lot, Larry. I think this was a great overview. So now we're going to dive a bit deeper into all the different sectors, and we're going to kick off with the emission trends that you've already touched on. I'll hand over to Changcheng for those.
Thank you, Belinda. And building on the overview Laurie just presented, I want to zoom in briefly on the emission picture. So let me start with the headline number for 2025. So 2025 is turning out to be a quite unique year. China's CO2 emissions are projected to increase by only 0.2% compared to the same time last year. So it's the first time that China's CO2 emissions have essentially stopped rising despite very strong electricity demand growth. Normally, these two indicators move together, and the tendency of decoupling we are observing this year is now quite rare. So it's like Laurie just previously mentioned, it reflects the scale at which clean energy has expanded, especially solar this year, to the point where almost all additional electricity demand this year has been met by low carbon sources. And at the same time, emissions linked to construction and heavy materials also fell because investment and building activity weakened significantly this year as it continued. But these reductions were partially offset by rising emissions from the chemical sector, where plastics and other petrochemical production continue to surge. So even in a year of near zero CO2 growth, we are still seeing that structural differences between sectors remain very visible. And looking ahead, this doesn't automatically mean China is going on a straight path to sustained declines, since China is still 5 years away from its formal 2030 peaking deadline, and we are not seeing a very clearly defined peak year in the new 2035 NDC. So it left room for some actors to increase emissions in the short term, especially in industries where new capacity is still being approved aggressively. So this is why the dual control system managing both carbon intensity and total emissions will be very crucial in the next 5-year plan, both on national scale and also on provincial levels. So if China is going to meet its 2030 target of reducing carbon intensity by more than 65% from 2005 levels, then we calculated that emissions in 2030 will need to be no higher than their 2024 level. So that requires a much stronger tightening of policy signals that we saw in the current 5-year plan. And also a quick note on non-CO2 greenhouse gases. This is an area that we rarely get to see clearly because at the moment it is not quite possible to track China's non-CO2 emissions since the latest official inventory was published in 2014, more than decade ago. So, um, China is the largest emitter of several superpollutants, especially methane, and they warm the planet much more quickly than CO2. So that means this non-CO2 section is also very important and requires continued policy efforts. So the new policy signal we are seeing this year is that China's new NDC is the first time the country has pledged a numerical economy-wide target covering all greenhouse gases. So this is an important step forward. However, most policies on non-CO2 greenhouse gases introduced during the past few years still lack quantitative targets, enforcement mechanisms, and a functional monitoring and verification system. To sum up, 2025 may mark an emissions plateau driven mainly by the rapid build-out of clean energy, but the trajectory remains uncertain and would require more strict policy signals on controlling all greenhouse gases. And with that, I will hand over to my great colleague Qi who will unpack what's happening inside the power sector.
Thank you, Chen Chen, for the overview of the carbon emissions. And yeah, China's energy sector is the largest source of the carbon emissions. And within the energy sector, power generation probably matters the most. And electricity demand in China is still growing in recent years, even as overall energy demand growth slows in the past 2 years. So this is because, as Lori said, transportation, buildings, and industries, they are all electrifying. The electrification rate increased rapidly. So the power sector actually faces a dual challenge because on one hand, it has to replace the coal power with clean energy, and on the other hand, it also needs to supply a rapidly growing amount of additional clean electricity. So if we look at the recent trends, that coal power generation has grown by about 4.3 per year on average over the past 5 years. That is very different from what transition pathways require. So it requires, which should be a gradual decline of the coal power should be a gradual decline between 2020 and 2030. Last year, in 2024, the power sector carbon emissions were broadly stable. We can see from the charts on the left hand. And this was mainly due to the strong growth in wind and solar, of course, that all we know, and also a recovery in hydropower, which had been shortage in the first 2 years of the 14th Five-Year Plan. And in the first 3 quarters of this year, electricity demand grew by over 6% year-on-year. Sorry. But the power sector emission actually fell by around 2%. That's because the clean energy continued to displace the coal power generation. And if this trend holds for the rest of the year, 2025 could be the first full year of emissions decline in power sector since COVID. So it suggests that China is getting close to a power sector emission peak. We saw a spike in October of coal power, but in November it declined again. So still the peak is very, very possible. And look at the right-hand chart. So that's the China's carbon intensity of power generation. It has been falling steadily, but we see that between 2020 and 2023, the progress is not in line with the transition scenarios because of the increase in coal power generation and the decrease in hydropower related with the drought in 2021 and 2022. But things get better since 2024. But still, the current speed is not enough. Like both Lori and Chen Chen mentioned that the key target that China is risking to miss is the 2030 targets, carbon intensity targets. We are quite sure now that China can't meet its 14th Five-Year Plan carbon intensity target, which is the reduction of 30%. And we will see how determined China is going to reach the 2030 targets, which is to cut the carbon intensity by 65% from the 2025, from the 2005 levels. Next slide, please. Okay. Yeah. So again, in 2025, China's non-fossil power generation is set to reach another new record high. And the overall generation is expected to grow by about 14% year-on-year, driven mainly by wind and solar. Solar generation in particular is growing very fast. We projected about 45% increase, and wind probably a 15% up. In the first 3 quarters, China added um, about 240 gigawatts of solar and over 60 gigawatts of wind. So many large projects are still waiting to be connected to the grid. So we expect the full-year additions are likely to exceed last year's level. And there has been a recent slowdown in the new solar and wind installations. It was in the 3rd quarter. It was mainly because there's a policy change in the pricing rules. So started June the 1st. Under the new system, wind and solar projects, they need to secure power purchase agreement on market basis instead of relying on the benchmark prices that linked to coal power like before. So many developers, they rushed to complete the projects before the new rules took effect in June, and so the installations slowed after that. But China's solar cell production, they continue to grow in the past few months. It's a positive sign that the demand is still robust even after the pricing system changed. So we will expect to see the future growth of solar and wind in the later, could be faster in the 4th quarter than in the 3rd quarter. Next slide, please. Okay, yeah, moving from the exciting slide to the challenging slide. So this the thermal power capacity. We can see very clearly from the chart that China's newly added thermal power capacity is set to reach its highest level since 2015, 2016. So probably highest in a decade this year. It mainly reflects the coal power permitting boom in 2022 and 2023, about more than 200 gigawatts of new projects were approved at that time. And many of those projects, they're coming online in 2025 and also 2026 and 2027. So as a result, China's coal fleet will likely to keep expanding for a few more years if the policymakers don't stop it in time. And at the same time, due to the development of clean energy power, we see a clear contradiction. Coal power capacity is still growing, but its share in power mix is dropping. So even when coal power is described as a flexible support to the renewables, most plants, they are still operating in a baseload mode. Coal power output can rise when the renewables are scarce, but it is rarely reduced when wind and solar are abundant. So this limits the renewable integration and locks in the emission in the power system. So on one hand, system flexibility remains a major bottleneck in China, and coal power still dominates dispatch and continues to operate largely as baseload. And on the other hand, China is also trying to encourage renewables to be used locally and also beyond the traditional power system. So we see the recent policy talks about green power direct supply, where industrial users can buy renewable electricity directly from the generators, and also zero carbon industrial parks where renewable projects are built on site and supply power directly to factories. So yeah, I think in the next segment, Xi will talk more about that. And so for the first time, the central government will also assess and evaluate the nanopower consumption of clean energy of each province, trying to make some progress out of the power system where the institutional reform is dragging due to the challenges that accumulated for years. So pass to CE for the industrial sector. Thank you.
Thank you. Belinda, can you show the next slides? Thank you. So to observe the industry sector, let's starting from the chart on the right hand. The black dotted line shows the reality, and the solid line shows the projections by different research. So we compare the reality with those projections. We can see that the total energy consumption from China's industry sector has went through a significant growth since 2018. This is mainly driven by the economic policies that focus on to respond to the trade war and also to tackle the pandemic. Economic slowdown, and we can also see that in 2021, 2023, that there are significant surge compared to earlier years. So this has shown that China's industry has go to the direction that is more energy intensive. This is from the energy consumption perspective. So the left hand chart shows the coal consumption of the industry sector. We can see that in earlier years, for the past decades, that the coal consumption has reduced. This is mainly due to the air pollution campaign that reduced the coal in the small boilers and also industry-wide campaign. But from 2024 and 2025, we can see the rebound of the coal consumption. Laurie has mentioned early that the chemical sector has become the main CO2 drivers. So we can also see from the coal consumption, the chemical sector, including the coal chemical, these are driving the coal consumption in industries. Next slide, please. Electricity also is one of the main provider for the energy for the industry energy consumption. We can see that for in the past decades, the total electricity consumption has been above all the projections that needed to meet climate goals. For China's industry, especially the latest 5-year. This has proved again that China's industry is quite focused on the energy intensive manufacturing subsectors. Slide, please. So as one of the largest emission sector in industry, steel ranked the second largest after the power sector. So one important climate target for the steel sector is its electric arc furnace steel share in the total steel production. The goal is to increase its share from 10% to 15%. So according to the latest data we compiled, that this low emission steel, electric arc furnace steel only accounts still like it's below 10%, even like below than 5 years ago. So China will like highly possibly miss these green steel targets by this year. For the building sectors, there is not so much public data that we can access. So here are charts we made based on the data we can find, we can see that the biggest driver for the of the CO2 emission from the building sector is from the gas and also from the power consumption in buildings. But the coal consumption has reduced in the past years. Is also benefit from the air pollution campaign by the central government, coal to gas and coal to electricity. So as a result, the gas consumption and the electricity consumption has keeping increase year on year. This also shows the lag progress in the building efficiency improvement, and also the especially for the electricity consumption in buildings. This is mainly driven by the unusual heat waves during summers, and also like this October, the temperature is much higher than the usual years. Okay, I will pass over to Belinda for the transportation sector. Thank you.
Thanks a lot, Xinyi. And this is the last section of the sectoral sectors, so please feel free to drop in your questions into the Q&A as well. We've already received some, but now's a good time. But yeah, looking into the transport sector, this is one, as Laurie mentioned earlier, that is quite aligned with the Paris consistent pathways and where we see emissions falling. So it's quite an exciting sector, I would say. The main driver is electrification of road transport. I'm sure many of you have been following this trend of new energy vehicles, the Chinese terms for electric vehicles that cover a few other, not just battery vehicles, but also plug-in hybrids and others. I think this is one of the key drivers. And this year, for the first time, we are seeing that for passenger vehicle sales, NEVs make up more than 50% for the first time, up from less than around 6% just 5 years ago. So it's really a rapid development that we are seeing, and that's not only the case in passenger vehicles, but as you can see from this chart, also across other vehicles. Particularly interesting, I think, also seeing electric trucks, where the market share jumped from just 8% last year to 23% this year. So really rapid development, not only in passenger vehicles, but also heavy vehicles. That now, overall, new energy vehicles make up 12% of all vehicles on the road, up from just 2% 5 years ago. So it's not only the sale, but we're really also seeing old vehicles coming off the road. And of course, we also see this trend in the production side, where we're seeing a growth of new energy vehicles of more than 30% compared to last year. Whereas on the other side, conventional combustion engines, we're actually seeing a decline of around 2% so far for this year. So that we're kind of seeing electric vehicles and NEVs more broadly really eating into the share of production in conventional vehicles as well. What's quite interesting this year too, the developments in the charging infrastructure. This is a topic, I think, around the world that people are very curious on how to support infrastructure for these NEVs to come on the market. And there's been rapid development with 18 million charging points now developed around the country. That's an increase of more than 50% compared to last year. And the government has published a new 3-year plan for building out charging infrastructure, with the aim to nearly double this to 28 million chargers in the next 3 years, especially also fast charging infrastructure and also vehicle to grid. So kind of like innovation of seeing how battery vehicles can be used to balance out grids, and can be connected in that sense. And when we look into how that translates into oil consumption, that's really interesting, because we see a direct correlation of these new energy vehicles on the road drastically reducing oil consumption in the transport sector. Again, in this year, oil consumption fell by 4.6% in the transport sector. and is now overall more than 7% lower than at its peak time in 2023. So this suggests very strong evidence that oil consumption in the transport sector has indeed peaked, and may have peaked overall, if not for chemicals picking up a lot of the slack, as both Sini and Larry mentioned earlier. So this is kind of the development that we're seeing, but it's quite exciting to see to what extent the decline in the transport sector can even bring about an overall oil consumption peak in the next couple of years. And in terms of electrification, this is also quite an exciting sector where for the first time we're seeing that the electrification in transport for the first time is actually aligned with the Paris aligned pathways. And yeah, that's quite a positive trend that we are seeing. And this is not only the case for road transport, but we're also seeing a lot of developments in terms of high-speed rail that now covers 50,000 kilometers in China, which makes up around 70% of global high-speed rail. And there's also a lot of ambitions to continue growing this by around 2,000 kilometers every year. So we are seeing quite an uptake of new rail passengers every year, like around 5 to 6% year-on-year growth for rail passengers that may be coming off the road and off planes to instead use rail networks that then obviously contribute to decarbonization of the transport sector as well. And I think the last thing I would mention is that in terms of policy, there's been a continuation for this kind of like policy trade-in subsidy for EVs to kind of continue like a continued policy that consumers can trade in their old vehicles for a subsidy for EVs. We will see to what extent that will be continued next year. But it was certainly an interesting signal to see that NEVs were for the first time also included in China's climate targets for 2035 under the UNFCCC, signaling that the government does see a huge continued role for electric vehicles in not only for the transport sector, but also from an economic point of view, as Larry mentioned earlier as well. So with that, we're going to stop the presentation of the outlook, and we're keen to get into the question that you mentioned, that you already shared. I know there was a question on carbon intensity that's been answered in the chat, but maybe Larry or Changcheng, do you want to briefly speak to that question on how the carbon intensity target was actually broken down by provinces? Because I think that will become quite interesting as well going forward. How will that work over the next 5 years?
Yes, thank you, Belinda. I will just talk briefly and Laurie can help address. So with the carbon intensity target, so it hasn't really becoming the primary enforced binding target for 14th five-year plan yet. So for the current 5-year plan, it's still the energy intensity target that provinces are binding to at most, and the carbon intensity target in the current 14th five-year plan are not explicitly written out in provincial plans, and they were just written as fulfilling the national targets. But since the dual control mechanism will be introduced and in place for the next 5-year plan, so we can expect to see and if there are any explicit targets written out in provincial plans for the next 5 years. Yep, pass on to Laurie.
Yeah, just thanks, Tenzin. Just for the background, so the way that this 5-year plan, the 14th 5-year plan that is ending this year, was designed is that there's the target for non-fossil energy consumption, the target for energy intensity, and the target for carbon intensity. And the ones that were supposed to be enforced on the provinces were the energy intensity and the non-fossil energy consumption targets. And when those two were calibrated so that if those two were met, the carbon intensity target would have been met, or in fact slightly over achieved. But then what happened during the 5-year plan was that when energy intensity improvements basically stopped or even went into reverse during the pandemic, when the less carbon intensive, less energy intensive sectors were declining and growth was coming from energy intensive industry, then the government basically decided to water down the energy intensity target by completely redefining what is meant by energy intensity, and also deprioritize the enforcement of the energy intensity target. So and the associated policies like strictly controlling high energy projects and so on. So then that means that the energy intensity target is missed by a wide margin, and that's why the carbon intensity target is not being met. We've looked at a bit at how the carbon intensity target will work in the next 5-year plan, and it does look like there will be targets. There will be a national target and then carbon intensity targets for the provinces for the 5-year plan period. This is based on, in fact, what Tisin found from some of the provincial documents that are anticipating the system.
Thanks both. Maybe we can look at one of the questions that asked to what extent the energy demand is fully accounted for and explained by our data, and to what extent, what are things that people should be aware of, also hinting at computing related demand, I think, which kind of refers to this question, to what extent are data centers driving some of this growth? I don't know, Chi or Larry, if you want to come in on that.
I'm happy to. Chi, do you want to take this or should I? Thanks. So it has been puzzling for a lot of people when I spoke to modelers in Beijing. They were basically shell shocked by the energy demand and electricity demand numbers. So total energy demand growing faster than GDP, and electricity demand growing faster than industrial value added, and so on. And this coming on the back of where most people feeling that the economy is not doing great, is quite weak and possibly weaker than the official targets suggest. But it's really when you start to look at the structural issues, the structure of the economy, how the output in different sectors has changed, that accounts for a lot of that. So it's another trap of talking about the economy as if it's one thing, when during this past 5 years, different sectors of the economy have been on completely different tracks, like the real estate sector contracting, services and private consumption quite weak, and then some of the manufacturing sectors expanding at blistering pace. So that helps make sense of most of that. The other factor is the huge increase in air conditioning, which it seems that, of course, it was increasing overall, but some of the policies promoting white goods consumption and the 2022 heat wave really convinced a lot of people that they need an AC, and it's backed by the sales and production manufacturing numbers that ACs have been deployed. And I imagine anyone who lives in a Chinese city will have seen the proliferation as well, or in the countryside. And the huge spikes that we've seen in electricity demand growth are correlated strongly with temperatures. So it's really the temperature and increased AC effect that accounts for much of the growth that isn't accounted for by the industrial sectors. AI, in terms of China's electricity demand, is still future, a future threat or promise rather than a major current factor. So the projections that I've seen suggest that over the 5 years, AI could add about 1 percentage point per year to China's electricity consumption growth, which is not nothing. That means that by 2035, AI would consume as much electricity as in China would consume as much electricity as most European countries. But still, in terms of China's electricity consumption growth, it's by no means a game changer. And personally, I tend to emphasize that previous projections of electricity demand by IT have been vastly overshot because the improvement in the efficiency of both the software and the hardware has been much faster than people have predicted.
Thanks, Larry. And I think in China, the issue is also that we have still a lot of heavy industry that is, a much, much bigger emitter. So I think there are quite a few questions on steel and emission trading as well. So Sini, maybe there's one question that you already answered in writing, but maybe you can briefly talk through what has been limiting the growth of electric arc furnaces in the steel sector, and to what extent you see an impact of the emission trading scheme expansion to cover the steel sector as well. Do you think that will have a big impact or less so?
Thanks for the hard questions. So I often get this curious question regarding why it's so difficult to ramp up the EAF production in China. It's mainly because of the overcapacity situation in China. The steel consumption in China has declined about 15% in the past 5 years. But the supply, the steel output, just declined maybe like 5% in the past 5 years. So we can see that there is a huge gap between the supply and the demand, which means like the supply is much lower than the demand. This led to the very low profitability of both blast furnace steelmakers and also EAF steelmakers, and also led to the surge in export. So in a sum, that it's also mainly because the economic competitiveness of EAF is lower than the blast furnace steelmakers. And also it's the blast furnace steelmaker, they are tend to maintain their blast furnace operating because the cost of close them down and then reopen it were much higher than just maintain them running throughout the year. So this is also caused the increase of the blast furnace utilization rate and also the decline in the EAF utilization rate. So as a consequence, we have seen that the share of EAF steel is roughly 10% or below 10% this year, 5% gap with the government goal, which is set by 2022. There are also some positive policy signs from the central government. Firstly, we have mentioned that the ETS expansion to include the steel sector within this year, and also in the latest policy, which also mentioned that for example, the steel sector, power sector might set the absolute cap by 2027. So and also the green electricity consumption target also include the steel sector this year. So with all these climate-related or green development-related policies, we can see that for the steel sector, it will facing more constraints for the next 5 years. And also that China's steel sector also facing increasing trade frictions since 2024. So their forecast for next year is by one research show that for next year the export might reduce 33% next year. So all these constraints or obstacles has forced China to further reduce its steel output for next year, and also because of the carbon peaking and the carbon neutrality goals, we need to ramp up EAF utilization rate, and also green steel making, like hydrogen steel making technology application in China. That's briefly, not very brief, but some of my answers. And we also have briefings on the steel sector specifically, and feel free to reach out for more details.
Thanks a lot, Xinyi. There's a lot more questions and a lot less time, so I'm going to try and bundle some of them and throw them at you too. There are quite a few questions at what is driving the coal expansion, what are kind of the drivers, and to what extent are state-owned incumbents also driving that? And also questions at if we see a continuation of renewables meeting the demand growth, to what extent does that impact projects like the Power of Siberia 2, or in broader sense, fossil fuel consumption in China? I'll throw these at you.
Thank you, Belinda. And I think I also saw a question about UHV transmission, and I'll also briefly touch on that. So basically, I think the UHV transmission does help to improving flexibility in China's power system, especially in bringing in power from other regions when to cover the peak demand in the receiving regions. But in terms of scale, one or two or three UHV lines, they can only cover a small fraction of the growth in the peak load in the receiving provinces. And on top of that, the lines, they depend on how generation is dispatched upstream, so their actual contribution is constrained by availability and scheduling in the exporting regions. So UHV mainly addresses the inter-provincial issues, but many of the key challenges still have to be solved within each provinces, such as how the coal power plants are differentiated in their roles, and how reserve capacity is organized, how demand response is developed. So I think UHV is a critical piece of the infrastructure for a power system that has a high share of renewables, but it can't solve all the system level problems. And as to coal power, about the approval surge in 2022 and 2023. So the background is President Xi actually announced to strictly control the new construction of coal power plants in 2021. But right after his announcement, there's a severe drought happened in the southwest China, so which caused a huge decrease in hydropower. So the inflexibility of China's grid system makes not only the southwestern provinces suffer, but also the eastern provinces where the power demand, where peak is, also suffer from the power storage. So, and then in the name of energy security, each provinces in the west, in the east, they all started to approve new coal power plants to make sure that in the future, even there's a hydropower shortage, that they can still have enough power. But the issue is, China actually is not lack of the dispatchable power. What China really lacks is the flexibility of the grid. If the grid flexibility and the power market can work in a more flexible way, this problem can be solved without adding more coal power plants. And of course, for now, we can see that more and more state-owned coal corporations, as well as provincial state enterprises are starting to join in this coal power boom. Because I think for coal corporations, it's easy to understand that they want to expand on the value chain. I mean, in the short window of carbon peaking before 2030, that they want to seize the opportunity to build as much as possible. For state-owned enterprises, their logic is basically for one's local energy security. Because during that time when there's a lack of hydropower in the southwest, the eastern provinces also can't get enough power from those regions. So one aspect is that, and the other one is also it brings a tax income and employment rate increase for local governments. So, yeah.
Thanks a lot, T. And I'm afraid this is all the time we have today. So thank you for all the other questions. If they're really urgent, Larry.
I was going to say, like, I'm at least happy to stay for another 5 to 10 minutes and talk through all of this for those people who want to stay. But we should certainly say thank you to everyone who wants to or has to drop off.
Sure. Okay, let's do it that way. Then we'll say thanks to everyone who can't join us for the next 5-10 minutes while we go through some of the other questions. And do feel free to check out the report. It's been published last Thursday, and there's a lot more details in it that may answer some of the questions. But yeah, maybe Larry, do you want to kick off taking some of the questions that you wanted to answer?
Okay, please flag the ones that you want to take, and I'll just run through everything that hasn't been taken by anyone else. So, short question: any hope of stronger standards on overseas production of critical minerals or transition minerals? Unfortunately, the line from China here tends to be very much that complying with local regulation, which is often weak and unenforced, is enough. And in Indonesia's case, for example, we've been also documenting that the projects don't meet local requirements for using green energy. So even there is more to do. Not seeing a lot of movement at the moment, unfortunately. Sectoral peak policy targets. So the most interesting recent thing is a lot of industry associations and think tanks have been throwing around peak years for different fuels. So oil peaking in 2026, coal peaking in 2027 or 2028, so different years. So clearly there is some expectation that these kinds of peak years will be set in the next 5-year plan period, and possibly also for sectors. I haven't seen as much on that. So on the carbon market questions, others feel free to jump in, but in general, the big thing with the carbon market is that it's currently not yet reducing. It's currently not creating an incentive to limit or shift away from fossil fuels. So its role is going to be still very limited. There was a general policy of expanding the carbon market to cover the main emitting sectors, and you can slice that many ways, but there's no way around the chemical sector. It's very clearly the biggest one that is being left out at the moment. So if you want to have any claim of covering all the main sectors, then the chemical sector will need to be added, and the system will start to move to absolute emission caps by 2027. So that's when it will also start playing a role in at least limiting emission growth, if not reducing emissions. Our base case for emissions, my base case personally at least would be what I've called a bumpy plateau. The huge increase in clean energy capacity in the past couple of years will still keep pushing emissions down next year, especially as it's integrated better into the grid. So there's quite a bit of evidence that it hasn't been fully integrated. There's what unreported curtailment. So it could technically generate significantly more than it's generating at the moment. Then we would expect solar and wind additions to start recovering and picking up under the new system. So it's unlikely that we'll see the kind of jump in emissions that we saw in the early years of this decade, but also not yet on track to a significant structural decline, which then means that emissions will jump up and down based on weather variations and economic cycle around a plateau. I think the remaining ones would be most natural for Chongqing and Tsi, given its methane and power market.
About the emissions question in the chat, yes, we agree that China is it has published a number of new policies, but they all lack quantitative targets and clear enforcement mechanisms. And this might create problems for this might create problems for emissions from abandoned coal mines, and because it's not currently not covered under existing regulations. So Laurie, do you have anything else to add on that?
On the MRV, there's a lot of work that has been done, and of course already publishing the inventory for 2021 this year was an improvement. So China is starting to make the emissions reporting a bit more frequent. The main thing is really the policymakers having the confidence to actually start setting targets to reduce emissions, and so far it seems that that isn't there for this 5-year period, but we can always hope, and so then it would be more building a system to start reducing from the declared emission peak, whenever that might be.
Yes, and just to add in terms of international cooperation, I think it doesn't look likely that China is going to join the global methane pledge anytime soon. There haven't been any signals on that, but they have been very keen in working with other countries on this. So at COP30, we saw a methane summit together with Brazil and the UK. I know there've also been a lot of discussions between China and the EU to work together on establishing these MRV systems and really establish best practices and learn from each other. So there is a lot of opportunities in that space, but like Larry and Changchang said, it's quite slow without quantitative targets, and it just requires policymakers to become a bit more confident in doing that. Qi, do you want to briefly cover the question that you answered regarding spot markets and the power market change?
Sure. So yeah, of course, it will be very helpful if we have a functional spot market that works for China's power system. But unfortunately, in China, it's still very lagged behind, and the market-based trading only accounted for about 64% in China, and among that, I think the sporting market only accounts for 4%. It's very few now. And I think by the end of this year, it's all the provincial sport market enter the trial period, not officially, and there's a national sport market working right now. So I think it will take years for sport markets in China to make some progress, but it's the right direction to work on it. Yeah.
Thanks so much. I hope that also answers the last question from Kai. I think, yeah, thank you so much for continuing joining us for another 10 minutes to answer all of these questions. If you do have more questions, please feel free to reach out to any of us or our China team email address. You will find that on the website. You're very welcome to sign up to the newsletters. And of course, after this big report, we also have a lot more things coming out early next year when it comes to emissions, when it comes to how clean energy contributes to the GDP, and more things on coal, steel, and air pollution. So do stay tuned. But yeah, with that, thank you so much, everyone, for joining. And thanks very much to our China team for sharing all of your insights and your knowledge with everyone. Have a lovely rest of your day.